Joining me now in studio is Talya Ginsberg from Umthombo Wealth to share her analysis on the day's market performance. Talya, good to have you with us. And you heard
Thank you, Ray, so much for having me.
No, great to have you here. Tech valuations, there's concern about it, causing problems, ripples in the markets.
It's quite a complex subject to get into within 1 minute, but I'll try my best. So it's probably been a subject for ever since COVID. There's been a lot of concentration in valuations of certain shares. We've seen in the US practically 7 shares have dominated the market for a number of years now. And then of course with AI, there's been very much this new rhetoric and very much a lot of exuberance regarding AI and naturally AI shares. And so I think there are pockets of the market where there is overvaluation. Take Plantier, for example. Certain metrics say that it's valued at 600 PE, which is insane, and then even some such as NVIDIA. But there are also, I suppose, parts of the market which it's not all a monolith, where you can find value and more reasonable valuations.
Right, so that's it, NVIDIA. I'm waiting for that stock reading to come out. Pick n Pay. Now, you heard the story we read about Pick n Pay, the Ackerman family sort of getting rid of a little bit, 8.5% of their gain. They had done that to prop up Pick n Pay, but that share price today down.
Yeah, Pick n Pay, it's been a tough share. You have their counterpart, ShopRite, who basically can't do anything wrong. And then you have Pick n Pay, the past decade, it seems like they can't do anything right. And so it is understandable why people would be very, I'd say, bearish on that share. They're technically loss-making. They've had bad strategy for the past decade. But with that said, I think people shouldn't write it off altogether. Summers, he is a great CEO, and there's possibility for him to turn it around. There's still a Boxer stake, which so then you're buying Pick n Pay at very cheap, and Pick n Pay doesn't have to be checkers. People forget that. They just have to, I suppose, contract and at least turn a profit.
Well, wait and see what happens there. Telkom, now there's a great success story. They're 6 months out today. I'll be chatting to the CFO shortly, but good results.
Yes, Telkom, perhaps I'm giving my age away here, but I remember Telkom being that very boring company that you would have your landline at home and they would just give you horrendous service. Yeah. But thank God they've left that and they've moved, as you said, more to mobile, data, internet, things people these days actually like. And I see the stock is up about 70% for the year, and it's one of those few stocks that actually deserves all the hype and all the re-rating it's gotten, because they've had a great turnaround strategy there. And they've also sold their towers business for 6.6 billion. They've given a special dividend this year. So perhaps the easy money's been made, but it's still probably one of the safer telcos to invest in, let's say versus MTN, which has operations in the likes of Nigeria. So you can sleep a bit better at night.
It's quite comforting to see. Like you said, used to be the landline, the whole thing that you thought, Telkom, oh, what a nightmare. But they've really changed it. So I'll be chatting to the CFO shortly. Then Coronation, there's a story.
Coronation, its revenue is up 10% for the year, and that's largely just driven on markets. Naturally, markets, particularly SA and emerging markets, have been up this year, but it's still been having net outflows. I mean, still lesser than last year. There's still outflows there, so it has been, as I said, driven by the market. And then the numbers are a bit complicated to read, because last year they did unwind that provision. They had a bit of a tiff with SARS, and that ruled in their favor. Though I suppose it's a nice asset manager, but at Umthombo Wealth we still prefer particularly 91 and even Signia.
Yeah, all those 91 shares yesterday were not great, but
I still think there's a story there.
There's a story there, I think so too. Right, Reinet.
Reinet, that would be one of Johan Rupert's investment vehicles, and let's be honest, I think we're all a little bit fascinated with billionaire families. But what I find very interesting with this company is they sold their stake in British American Tobacco earlier this year, and they've sold down 50% of their stake in what's called PIC, Pension Investment Corp, and they're going to get a whole bunch of cash. I may be wrong, but I believe 100 million rand is going to come onto that balance sheet. And given that the company is trading at a discount, you're basically buying money at a discount. So I think a very interesting investment case over there.
Right, you can't give me your stock pick, not yet, but I want to know what else you're watching. What are you watching at the moment? You have this bird's eye view of the markets. And looking today, it's just not a true reflection on what's going on. We're reacting to what's happened in the United States. And after that massive government shutdown, it's just, I don't know, put the cat amongst the pigeons, so to speak. So what are you watching?
What I'm watching is still very much on, I suppose being in South Africa, you have to look at resources. And so I believe my colleague came on the network on Friday and he spoke about platinum, which seems very interesting. Spoke about an interesting stock pick, Sappi there. So your viewers should check that out. And even just if you're looking for themes, I'd say you did mention the AI theme, the whole tech theme, that we still very much believe in this energy theme, that all these AI still needs data centers, so things like uranium if you're looking for those kind of themes. And then on SA Inc., there's still a lot of SA Inc. companies that we very much like and a lot of good value on the JSE.
Yeah, sounds good, sounds good. We'll watch carefully right now. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
I came up with results, headline earnings per share down 28%, but it masks about 50% plus increase in operational earnings, and that difference is just currency loss because it is pounds, unfortunately, and pound hasn't been doing that well. But I think they are still executing extraordinarily well in their model, whereby buying underappreciated industrial assets outside of major business centre and improving them into a mature type of asset, selling it forward, and the continued strategy of looking at government, shall we say, aided defence and industrial parks, still executing very well on that. Price has been going nowhere, but at some stage I think this type of operational earnings and the history and consistency of that should be coming through in the share price, so I'd be buying that up on any weakness.
South Africa's been upgraded. The government bonds hit records today. And historically, these things are highly correlated, the yields on the banks and the yields on government debt. And this particular rally, we've seen significant offshore buying in government debt, but not in the banks, not in the local banks. That's quite unusual. And just given everything else and the sort of bullishness, I guess, that I've allowed myself to express today, these banks just look like absolute screaming deal. So a little bit boring, but Nedbank, call it the beaten down of the big four, the purest SA only play.
Right, well, there you go. So you have two there as well. Let's start with Sirius. Your thoughts on Sirius?
Sirius, it's actually a property counter that I like. And I think what your viewers may not be aware, they operate in the UK, but predominantly Germany. They buy office parks, and then, as I said, particularly Germany, which is a very industrialized economy. They buy office parks that's perhaps good land, but need a bit of love. They roll them out, and then they sell them and they rent them at an increased yield. And they're generally very good operators, and I think it's also very good also business model into very interesting economies. And so if I'm not mistaken, I believe they're trading above NAV, and so perhaps not the cheapest out of all the REITs out there, but they are more expensive for a reason. So definitely one that if you own it, just keep it, or even if you get a chance to buy it, particularly at a good price, definitely worth considering.
Yeah, good idea, good idea. Nedbank, there's been lots to talk about Nedbank lately. This isn't the first time this has come up.
Yes, we asset managers for quite a while. We've liked the banks, and why wouldn't you? They're banks, and they're trading at great valuations. You're getting good dividend yield, and if I understood correctly, he said yesterday that basically a proxy for debt, for bonds. And so I said you get to buy actual banks that are probably better run than a lot of economies at good dividend yield, and particularly Nedbank, good valuation, probably undervalued relative to its other SA peers.
Right, okay, those two. Your stock pick, I mean, yeah.
My stock pick is Advitech.
Great.
And so they're what you would say an education company, both primary and tertiary education. So viewers out there may be familiar with schools and brands such as Crawford College, Trinity House, also in the tertiary education, Rosebank College, as well as Varsity College. And of course, the theme of the degradation of education, government education in South Africa, both primary and tertiary, there's definitely a good demand for education. But why I picked Advitech over its peer Stadio, who I actually like very much, is Stadio is up about 70% for the year, so it shows you that the market is very much seeing the growth potential in Stadio, but I think they're underestimating that potential in Advitech, who also has particularly a great growth lever in rest of Africa, such as Botswana, Kenya, East Africa, etc. But then they also have a lot of quality elements to them too, great ROEs, great margins. And so if you want a mixture of quality and growth, I think Advitech's your counter.
Here we go, Advitech it is. Talya, thank you so much. Good to
you
have
very
you on
much.
Business Lunch. So that was Talya Ginsberg from Umthombo Wealth.